So in the problem, we have to do the profit and loss account, profit and loss account and the balance sheet. So we don't need the general profit and loss account because as we had discussed, there's nothing that goes in the general profit and loss account in this problem. So that's not required. Only the profit departmental trading profit and loss account and the balance sheet. So the name of the firm is in the books of Rohit Chaudhary. Departmental trading and profit and loss account for the year ended, have they given as a year? Yeah. 31st December 2001. 31st December 2001. And the departments are hardware and electrical. Hardware and electrical. And we also have the balance sheet as on 31st December 2001. So normally when, like I said, whenever there's a balance sheet, I prefer to post the items simultaneously. So we will try to do that. Okay. So we have the first one, that is capital. Capital will go directly to the balance sheet in the inner column because we need to adjust either net profit, net loss, and also the drawings in case there are any. So capital is 71,000. Then we have sales. We don't have any return inwards, so directly sales by sales. So the sales are 59,000 and 29,500. 59,000 and 29,500. Then there's purchases, but before purchases, I will normally write the opening stock, which is below purchases, to opening stock on 1st January 2001. Has anyone done the problem yet? Did anyone solve it? I gave the answers yesterday. Did anyone attempt to solve it? Did you get the answer, Rupa? Oh, good. Okay, good. So opening stock 2320 and 2136. 2320 and 2136. Then we have purchases 20,000 and 10,000. 20,000 and 10,000. Then there is salaries. Salaries normally go to the profit and loss account. So we will just, okay, I think I can post that. There's, yeah, I'll leave some space and post that so that we don't forget. So salaries. So I will leave some around, yeah, I don't think there's anything else besides salaries that goes there. Sorry, besides gross profit. So I will just leave a line for gross profit. To salaries. Now, before we post the salaries, we need to be a little careful because there is an adjustment to salaries. Okay, at 31st December 2001, the following amounts were outstanding. So I told you whenever you're solving even for the exam, you have a hard copy of the question paper with you. As and when you read the adjustments, make a note here so that you don't skip the adjustments when you take this item. So before I take the salaries, I can actually directly add it here. Salaries given to us are hardware and electrical 20,560 and 15,440. And here also we have outstanding salaries. Okay, so hardware is 250. So 250 I will add to this 2560. That will give me 2560 plus 250 will be 2810. And this side it is 1540 plus 170, which will be 15,610. 15,610. I will just put in the brackets here just so that we know or you know, including outstanding salaries. So I've already added the outstanding salaries here. We normally don't show add salaries because then the calculations will become difficult. Okay, because we are doing two columns here. So if we put as add outstanding, it becomes difficult. So either do it as a working note or you can directly add it here. Now this outstanding salaries will also have a second effect in the balance sheet because it's a liability. So I'll show that right away. I'll leave some space for net profit and drawings and all, and I'll show outstanding salaries. So of hardware and electrical. Hardware and electrical. So hardware it is 250, electrical 170, 250 and 170. So that will come to 420. That will come to 420. 420. Then we move on to the other items. Advertising. Now, advertising, there was nothing given as to how to divide advertising. So, we decided yesterday that it's going to be divided on the basis of sales. Or did they tell us? No. Advertising, nothing was told to us. So, we decided to divide it based on sales. So, to advertising, advertising. Now, if you check the ratio here, 59,000 and 29,500. If you check it, I think this is 2 is to 1. Okay, advertising, it will be 29,500 and 59. 59 is double of this. So the ratio will be 2 is to 1. You can do the calculation later and find the ratio. You can check it out for yourself. So advertising 615 divided in the ratio of 2 is to 1, we will get 410 and 205. 410 and 205. Then there is discount allowed, hardware and electricals given separately already. To discount allowed. The amounts are 400 and 200. Coming to the other side, we have drawings. Now, drawings need to be minus from capital. So, I'll show that less from capital. Less drawings of 3,000. Less drawings of 3,000. I won't still total that because we have to adjust the net profit and net loss as well. Then we have building. If you remember, there was no adjustment to building. There's no depreciation. So, building we write as it is. Building would be 43,000. 43,000. Then there is equipment. Okay, so this will have hardware and electricals. In the balance sheet, we don't have two columns. Balance sheet, it is just one column. So you total it in the inner column. Total it in the inner column. So equipment, like we have seen, it is 18,000 and 17,000. Hardware, it is 18,000. Electrical, it is electrical, it is 7,000. I won't write this in the outer column yet because there is depreciation. So I'll just leave it this way. There's depreciation on equipment. If you remember, we had discussed here. You can see there's a depreciation to be provided. We will check that later. Then we have debtors and creditors, 10,200 and 5,319. So debtors are on the asset side. Sundry debtors. Debtors are 10,200. And we also have the creditors. Creditors are 5,319. Then there is a bank, that's cash at bank, 5,600. Or we can just write bank. It's basically cash at bank, 5,600. Then there is rent and rates. Now we need to find the ways of dividing this to rent and rates. To rent and rates. Now they've already told us the floor space. They've given us the floor area in square feet. So rent will be divided on the basis of this. So this is 4 is to 2, which will become 2 is to 1. So this will be 2 is to 1. So that would be rent and rates would be 5,000, sorry, 1580 divided in that ratio will get, okay. Now, rent and rates, before I forget, yeah, there is an adjustment. Okay. The general administrative expenses and the rent and rates included prepayments of rupees 33 and rupees 80 respectively. So basically your rent and rates, the rent and rates is equal to the amount that they have given, 1580 minus the prepayment. Prepayment is how much? Prepayment is 80. That is paid in advance. Rent and rates, it is 80. So we need to minus that 80. And actually the rent and rates are 1,500. Okay, so when we are dividing it here, it will be 1,500. So here it will be 1,000 and here it will be 500. Okay, we can't divide 1580 directly. We need to adjust the prepaid or adjust the outstanding and then divide. If this was outstanding, I would have added 80. Since it's prepaid, I'm minusing. At the same time, we also need to take prepaid rent and rates in the balance sheet. Prepaid rent, which is 80 rupees, since it's an asset. Okay, it's an asset because it's paid for next year. Paid for next year and this year it's. We also have canteen charges, 875. Canteen charges 875. Now to divide this, this will be divided based on the number of workers. 9 is to 6 will become 3 is to 2. 3 threes are 9, 3 twos are 6. 3 is to 2. So if I try to divide canteen charges, that's 875. In that ratio, it will be 525 and 350. 525 and 350. Then there is heating and lighting. We have an adjustment to this. Heating and lighting, 880 and 20. Okay, so outstanding is 20. So when we are dividing heating and lighting, it will be 880 plus 20. So it's going to be heating and lighting. I'll just make a note of it here itself. Heating and lighting is equal to 880 plus 20. Why I've added 20 here? Because 20 is outstanding. It's not prepaid. Okay, so when we are dividing heating and lighting, it has to be 1000 has to be divided to heating and lighting, again based on floor space, and that would be 4000 is to 2000, which would be 2 is to 1. So that comes to heating and lighting will come to 1, just heating and lighting. Eight eighty plus 20, sorry, I made a mistake here. 880 plus 20 is not 1000, it is 900. Okay, so heating and lighting will be 600 and 300. 600 and 300. Then we have insurance of stock. This will be on the average stock levels, 940. There's no adjustment here. Two, insurance of insurance of stock. This will be on the basis of average stock levels, which will be 25 is to 22. So 940 divided in that ratio. 25 is to 22. Divide 940 in that ratio. It will be 500 and 440. Then we have the last one here is general administrative expenses 2073. We have an adjustment that there is prepaid general administrative expenses of 33. So here we will have general administration expenses is equal to 2073 minus 33. 2073 minus 33, which will be 2040. 2040. Okay, so 2040 has to be divided. They've already given the proportion to general administration expenses in the ratio of, yeah, primarily incurred in relation to the processing of purchases and sales invoices. So how are we going to get that ratio? I will just do a simple calculation. Ratio for general administration expenses in in proportion to the total purchases and sales. Okay, so if you check here, the total purchases and sales of hardware will be 59 plus 20, which will be 79,000. 79,000. How did I get this amount? 59,000 plus 20,000 is to 79,000 is to here 29,500 plus 10,000, which will be 39,500. Is to 39,500. And how do I get that? 29,500 plus 10,000. I think the ratio will be 79,000 is to 39,100. We will get 2 is to 1. Okay, why have I done this calculation? Because they have said the general administrative expenses are primarily incurred in relation to the processing of purchase and sales invoices. So these general administrative expenses are incurred for the work of processing of this. So the only way to find out the ratio of how to divide it appropriately would put the purchases and sales together of each of the departments and find a ratio between them. So 2 is to 1. So I have to divide 2040 in the ratio of 2 is to 1. So if I do that calculation, I will get 1360 and 680. 680. So we have posted, I think I've missed some outstanding expenses. Yes, I did not mention this outstanding heating and lighting. I will mention that. Outstanding heating and lighting. Sorry, I forgot that. Which will be outstanding heating and lighting is 20. And we also had another prepaid expense, that's prepaid general administrative expenses. Prepaid uh, general admin expenses, which was, how much was it? It was 33 rupees. Okay. So we have finished all this. We have finished this adjustment as well. We have taken it into account in both the places. Both the effects have been shown. This also has been done. Both the effects have been shown. Stock. Now this is the closing stock. Again, two places in the departmental trading and profit and loss account. By closing stock. It will be hardware is 2,800, and this side we have 2,450. Similarly, in the balance sheet, closing stock also has to be shown in the balance sheet. Closing stock, hardware, and electrical. Hardware, it is 28 and 2,450. 28 and 2,450. So the total here comes to 5,250. 5,250. So that's done. That adjustment is done. Depreciation is to be provided on equipment at 10% on WDV. So both the departments have their respective equipment. So for both, we will have to calculate 10%. So here for hardware 1,800, electrical it will be 7,000. So to depreciation 1,800 and 700. Similarly, we need to show depreciation in the balance sheet. So what I will do is I will just say less depreciation and I will put both the amounts together. Okay, so 1,800 plus 700, which will be 2,500. 2,500. So after adjusting the depreciation from 18,000 plus 7,000 would be 25,000 minus 2,500, we will get 22,500. So those two effects have been shown. Then we have, yeah, I think everything else has been done except this. Always remember this manager's commission has to be kept last. Okay, I showed you the difference. If it's partner's commission, we would normally prepare the general profit and loss account and show the partner's commission there. But since a manager is considered as an employee, the manager's commission for the respective department is shown in the departmental trading profit and loss. Okay, so two outstanding managers commission. What have they said? The managers of the hardware and electrical departments are to be paid a commission of 5% of the net profit of the respective departments. Now, we don't know the net profit yet. Okay, we don't know the net profit yet. So first we will have to do the entire calculation, calculate gross profit, check how much is the net profit, and then pay off that commission. So this total here comes to 61,800. This side we have 31,950. 31,950. So two gross profit carried down. For hardware, it's 39,480, and for electrical, it is 19,814. 19,814. Bring down the gross profit by gross profit brought down. Okay. The total here will be, there's nothing else on the credit side, so it's going to be the gross profit itself, 39,480. 39,480, and here we have 19,814. 39,480 and 19,814. Okay. Now, before I directly go to calculate the net profit, I need to pay 5% commission to the managers. 5% commission on net profit. Okay, net profit up till all the expenses are considered. So what I'm going to do is first hardware 39,480 minus all those expenses. I will get, just do a small calculation, 39,480 minus all these expenses, starting with salaries 20,810 minus 810, or I can take 1,810 minus 525 minus 1,100 minus 1,360 minus 1,800. Okay, you get it as 12,075. Okay, so when I'm calculating manager's commission, it will be on 12,075 into 5%. 12,075 into 5%. Okay, and 12,075 into 5% will be, if you do the calculation, it will come to into 5%, it will be 603.75. It comes to 603.75, so it's going to be 604. How did I get this? 12,075, 39,480 minus all these expenses, whatever you get, into 5%. And then when you're calculating the net profit for that department, since we are doing one department right now, uh, what we can do is from that 12,075 that you get, from that 12,075 that you get minus 604, and you'll get the departmental profit, which comes to 11,471. So what I do is take this total this side, okay, minus all the expenses. On whatever amount that I get, I calculate 5%, and that amount then I deduct from that profit that I had actually calculated and get the final profit. Okay, and then coming to this side, 19,814 minus 15,610 minus 405 or 905. Then we have 650 minus 650 minus 440 minus 680 minus 700, which will be 829. So this side is going to be 829. So 829 into 5%, into 5 divided by 100, which is 414. Sorry, 5 divided by 100, which is 41.45. So 41.45 will become 42. So here just outstanding commission to managers 42 rupees. Okay, it's on 829, 5%, you get 41.45, which is 42. Now that 42 you minus from 829, 829 minus 42, you get 787. So this is the final net profit of each of the departments. Now, this will have two adjustments: outstanding manager's commission. Okay, it will also come because it's still payable. So in the balance sheet also I need to show that outstanding manager's commission. You can show it separately department wise. Hardware it is 604, and electrical it is electrical it is 42. Electrical it is 42. So 604 plus 42 comes to 646. The total commission is 646. Similarly, we also need to transfer this net profit here. So add, since this is one calculation, okay, prefer to do it here itself. Less drawings, add net profit. So the net profit of the two departments, I will just show the calculation here instead of showing it separately. 11,471 plus 787, which comes to 12,258. 12,258. So 71,000 minus 3,000 plus 12,258. The final total here will be 80,258. 80,258. Just take this a little higher. And then the balance sheet total, I think the balance sheet tallies, it will be 86,663. 86,663, 86, 86,663. Okay, so that's the balance sheet total. So this is how problem 19 is done.